Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I am just going to go ahead and review the markets, talk about all sorts of things. It's not going to be as organized as what I usually do, but I just want to get a basic overview, talk about specific stocks, specific commodities, specific indexes, and just get a basic idea of what in the world's going on, and get a basic overview of what's your surroundings, I guess. Alrighty, so yeah, let's go ahead and review these key markets. Alrighty, the US dollar index is being caught by the Bollinger Bands just a little bit. It has been trading sideways, and it is getting caught at the bottom of a channel. Not only that, I do kind of feel that we could possibly see somewhat of a support in the dollar index, but again, you know what, I would wait a couple days, just see what in the world's going on, take your time, don't go in and start rushing in and start making trades. Now is the time you want to be on the sidelines, you don't want to make a trade. Trading is only good when you have the right setup, and right now we're not getting much of a setup at all. The only thing I see is a possible support. A possible support is not very good. Entry, you want to make sure that you're seeing somewhat of a strong base, a confirmation to the upside. We're not getting an engulfing pattern. We're not getting anything to really consider the dollar index going higher. And also, we're not getting any global event making the dollar index or the dollar in general a much better candidate as an investment rather than holding on to euros or the British pound or the Japanese yen. So again, US dollar is going to be, it's going to be trading flat for a little bit, and until I find a reason to be buying into the US dollar index or anything else for that matter, it's pretty much flat to positive. But again, that's my whole entire, outlook on it, kind of flat, kind of positive, but not much more than that. I'm not looking for much out of the dollar index. The only point here is that the dollar index is starting to look like it's fighting support. There's a difference between fighting support and looking like you're fighting support, and right now it's just looking like it, okay? So again, we need a trend line confirming that it can find support and reverse. And if not, too bad, so sad. We're not going to get that much of a pullback in silver, gold, and the rest of the markets. But if we do see that type of confirmation to the upside, then chances are silver, dollar, whatever, everything, well, no more like silver and stock and gold will have a sizable pullback. But there are some key indicators that are going on all over the place that makes me a little leery. I think that the US dollar could finally find some support and go a little higher. One of them being is the volatility index. As you guys can go ahead and see, the volatility index hasn't really pulled back by much these days. In fact, you see investors are relatively unconfident in the volatility index, but these days the volatility index has been going down far less as the markets have been going up. That implies that people are feeling less and less and less confident in the stock market and the dollar's descent. That also implies that if the volatility index is continuing to gain more steam and more strength, that also implies that stocks will have to have a pretty sizable pullback in the near future. And we're not only that, we're also in the sell in May period. Remember, May 4th was when the flash crash happened. We're only 2 days from May 4th, 2011. May 4th, 2010, we had a major crash. And could we see a similar scenario? It's more than just possible, and you probably won't see an 800-point decline, but you could see a pretty sizable decline in the next coming days. The volatility index is pointing towards that, and again, the whole point here is not to make a trade, but to just watch and observe a little bit, kind of see what's going on, feel the water. You need to see the dollar index have a major reversal, otherwise you're not going to see a major you're not going to see too major of a market crash. We don't have a stimulant. We don't have a big finger. So again, the circumstance is a little different this time. People are just being more cautious. It doesn't mean outright speculation quite yet. So again, moving on, I want to go ahead and review the Dow Jones Industrial Average. We do have an inverse hammer. Inverse hammer is relatively negative for stocks, I will admit that. And you do have a possible base on the dollar index. Volatility index isn't going down as much as markets go a little higher. All those things are very bearish indicators. However, the only problem is that if you look at the dollar index intraday, you're not seeing it decline. You're starting to see a downward trend. Remember, higher. I guess lower lows, and you got lower highs. And remember, I mean, that's pretty bad. I don't really like that. I mean, on an intraday basis. But if you look at the dollar index over a longer term period, like a 6-month chart, you're also noticing that it's flatlining a bit and trading in a flat pattern off a Bollinger Band and a channel. So, the indicators are really all over the place from a minute to daily chart. But overall, if you guys are looking at a macro view, the longer term time frame, the longer term time frame always wins out, and it is showing a bearish and a bullish indication for the dollar, therefore a bearish indication for stocks, commodities, and the like. Now, the Netflix. Now, I want to go ahead and review some key charts. The silver spot is also finding a small bounce, but it kind of looks like a dead cat bounce. It could actually break below the 20-day moving average. I wouldn't be too surprised if something major happens on May 4th of 2011. Okay, so if you see something major on May 4th, 2011, don't be surprised. That was the same exact day last year when stocks fell by 8% or something. So if you see something pretty major like that, well, like I'm saying, don't be too surprised. If you're a short-term trader, you get rid of your positions right now before you see something major happen like that. So something major like that happen. Now, if you're a longer-term trader, I would probably disregard everything you're listening to right now in terms of short-term trading. In fact, if I were you, I'm assuming if you're a long-term investor, you're a dollar cost averager, I would just wait for stocks to have a pretty decent pullback, and then you just buy your favorite names. And that also includes silver as well for silver long-term investors, I guess. You see a major pullback, then you go off and buy silver. But right now, you're probably going to get killed if you buy silver. So I just wait and basically wait for a more sizable pullback. I do like $38 down in the 40 area if it ever reaches there. And pretty much another good area for me personally is 34. So 34 I'm a big fan of. I would really love it down in the 34 area, but 38 is another area I'm a big fan of as well. So anywhere between 40 to 34, and you'll probably do okay if you're looking for a longer-term investment horizon. Now, going on, I'm going to go ahead and review some key trades. ProShares Ultra Silver. I do anticipate a quick bounce, maybe for maybe a day or something. Maybe on May 3rd, you probably see a small bounce, but then it would it could just continue its downward trend. 30-40 could be a great area of resistance, and if you guys look at the silver spot right now, and overnight, it's showing a head and shoulder pattern. Head and shoulder patterns are pretty bad on an intraday basis. It hasn't been able to break out of any previous resistance area. It hasn't even gone close to 48 over the Monday trading session. And Tuesday we have a head and shoulder pattern and a double topping pattern, which is pretty bad. Again, those are all indicators I really, really don't like. I don't like seeing this type of chart, therefore I have to be pretty bearish on silver in that aspect. However, again, with how the dollar index is reacting, I mean, short term you could probably see a day decline on dollar index. I guess a very small decline, but on May 4th you could probably see a huge reversal. So again, the only thing I'm trying to point out here is that you could see a quick bounce in silver just to see it go lower. And if you see that, again, don't be surprised. That's kind of what I'm seeing. Now, if you guys look at Netflix, I'm just going to go ahead and move on to the next trade, which is the Netflix. Netflix has a head and shoulder pattern, as you guys can go ahead and see. It's the head. No, it's the shoulder, head, shoulder. It has to reach a double topping pattern. Double topping pattern right here at around 237 or 238, somewhere around there. And again, that's pretty negative. It means that there's a great shorting opportunity available in Netflix right there. Again, it is relatively risky, so if you're going to trade it with a pretty tight stop. And again, I'm anticipating much more downside in at least judging by what I'm seeing overall in the markets. I do anticipate a lot of downside for tech stocks in general. Alrighty, moving on, Amazon.com. I could see Amazon.com go up for another bounce, maybe you could even go up till around 210. I'm not sure. I just don't want to buy it. I don't want to short it. I'm pretty neutral on this one. I just don't see any trade. I can't buy it. I can't short it. There's no really good technical reason for me to do either of those two things. So I'd much rather pass and just watch Amazon at this point. As for Silver Wheaton, Silver wheaten does have a double bottom pattern. It could be good for a quick scalp. You could probably see it go up for a single day. That's probably the most you'll ever see out of silver wheaten. Anything more and you're just being plain greedy, and you're probably going to get killed if you hold on to it for any longer than that. Now, moving on, I want to go ahead and talk about Apple Incorporated. Apple has far less accumulation these days. Not that many institutions are accumulating it. Now, that's pretty bad because I'm going to go ahead and read out the accumulation numbers. But if you guys look at this period around March, all right, you guys, I noticed that there was accumulation somewhere around 420 million, right at that price level, right? And pretty much right now, at this level, there's accumulation of 350 million. All right. Now, if you look at the previous period, yeah, the previous period, it reached around 400 million right here. Okay, it reached the same area with an accumulation of around 350 million shares on average. So what's the point? The point is that institutions aren't accumulating as much shares in Apple. If you're not accumulating as much shares in Apple, that also implies more downward pressure because institutions aren't buying it. If institutions don't buy the story, no one else will, because again, the only thing that keeps a $320 billion stock afloat is institutional demand, and if institutional demand is going down, that means that Apple over the longer term has a much longer term negative trend ahead of it. Moving on, crude oil has been trading flat to negative. I don't see much upside. I could probably see crude oil going downwards a little more, at least over the next weeks. Over the next couple of weeks, with the dollar index probably strengthening. Therefore, I have to be relatively flat to negative. That's kind of my whole chart bias here. And also, I don't see much of a trade. I don't see much of an entry or exit. I'd pretty much avoid the June 2011 crude oil E-minis. So again, that's my whole outlook on markets today. If you guys like what you watched, please be sure to go ahead and subscribe to my YouTube channel. And if you guys like the charting software, be sure to go ahead and check out the link right below. Anyway, take care, guys, and I will always see you guys in the coming weeks and months ahead.